Good morning. This is Robert Sijpesteijn bringing you this morning's market update. European stocks slid for a second day amid concerns that financial market volatility sparked by China's currency devaluation will harm global growth. Stocks sensitive to China's economy, including car makers, miners, and luxury good companies, led a decline on Tuesday. A gauge of mining-related shares posted the biggest decline on the 19 industry groups on the Stoxx Europe 600 index on fear that the yuan devaluation will sap demand for commodities. Rio Tinto Group lost 2.8% and Glencore Place slid 5.1%. Auto-related shares slipped the second most, with Daimler AG and BMW AG dropping more than 3%. The Germany 30 lost 350.6 points yesterday, closing at 11,327.4, and has continued to shed points early this morning, currently down 242.3 points, hovering just above 11,000. The UK 100, which had a sell-off in its major luxury brands such as Burberry, saw the index drop 70.5 points to close on 6,681.3. As of this morning, the index has continued its decline, currently down 85 points, pricing at 6,573.3. Moving to the US, Apple's decline of 5.2%, its biggest single-day move since late January in 2014, saw the stock drag indices downward onto the negative effect China's currency devaluation was already set to cause. The US Tech 100 fell 60.19 points, or 1.27%, closing at 4,525.75. The US 500 lost 0.96%, or 18.45 points, ending the day at 2,088.28, while the Wall Street declined 166 points to finish on 17,432. Taking a look at commodities, global oil supply is growing at a breakneck speed despite a collapse in prices. The glut is likely to persist well into 2016, even as demand increases at its fastest pace in 5 years. The International Energy Agency, the West's oil watchdog, has said global oil supplies outstripped demand in the second quarter by 3 million barrels a day, the most since 1998, even as it's raised its forecast for demand this year and next. The drop has inflicted massive pain on oil export countries, widening budget deficits and weakening currencies. Energy companies have laid off an estimated 70,000 workers and scrapped projects worth billions of dollars, especially in high-cost areas such as Canada's oil sands and the deep-water fields of the Gulf of Mexico. Brent crude dropped below the $50 mark yesterday, closing at $49.34 a barrel, and gold, on the other hand, has continued its climb back, maintaining levels above $1,100 and is currently pricing up on the day at around $1,117. In today's corporate news, E.ON has reported revenue of €57.3 billion, up 5% year-on-year. Nestlé is being sued by India for $100 million over unfair trade practices. Balfour Beatty reported revenue of £4.1 billion for the first half of 2015. Commonwealth Bank of Australia has posted full-year net profit of $9.1 billion Australian dollars, and G4S reported revenue of £3.3 billion for the first half of 2015. Today's Data in Focus sees at 9:30 in the UK the claimant count rate report, the ILO unemployment rate and average earnings report released, whilst at 10 a.m. in Europe we see the industrial production year-on-year, as well as the industrial production month-on-month released, and at 7 p.m. this evening in the US monthly budget statements are released. That's all for this morning's market update. Thank you and goodbye.